Welcome back to our auditing class. In the previous class, we have discussed about the criminal liabilities of an auditor. So, liabilities of an auditor, they are grouped under two heads. We have the civil liabilities of an auditor and we have the criminal liabilities of an auditor. So, in the previous class, we have discussed and we have completed the criminal liabilities of an auditor. In today's class, we'll be discussing about the auditor's report. Auditor is supposed to give out a report, isn't it? So how that report should be, okay, we will discuss today. So what do you mean by auditors? See, the work of an auditor, right from the beginning, what he does, he'll collect all the necessary evidences about the financial statement, isn't it? And what he will do is he will gather the evidences that are, the company, they will gather the evidences and these evidences, it is examined by the auditor, okay? And he will be very careful and with due diligence and skill is going to examine all these evidences, okay? So once these evidences are examined, he is going to draw a conclusion, okay? He is going to form an opinion, isn't it? So this conclusion he has to it is to be incorporated in the report that is to be given to the client. Now client is the members of the company, the organization who has appointed the auditor for getting the books of account audited, okay? So auditor is going to give a report to the members of the company, okay? So the main intention of audit is to give an assurance to those users who are going to uh, go through the financial statements of the company, okay? So these users who are using the financial statement of the company, to them the auditor is giving an assurance that the statement that you are referring is accurate and reliable. That is, if you're going to invest in this particular company, and before investing, if you want to know the position of the company, then whatever statements you are referring, they are accurate and reliable. You can trust this financial statement. The reason is it is being audited, in the sense all the evidences, all the transactions are true, and all the transactions, they are supported with the documentary evidences, and all the documentary evidences are clearly examined by the auditors. So auditor, they are saying that if you are going through the financial statement, definitely these financial statements are true and accurate and also reliable, okay? So here, expressing an independent and expert opinion about the fairness of the financial statement is very important, valuable service that is offered by the external auditor, okay? So here auditor, they have to uh, give a word, that is they have to give their opinion about the balance sheet, about the profit and loss account, okay, which are laid before the company's general meeting, okay? So here they are telling that what all statement that they have examined, they are all are accurate, okay, and they are all done with that they can trust, that they can rely upon those statements. So they are forming the auditor, they form an opinion and they give out their own opinion, okay? So this is done usually in the form of report by an auditor, and it is usually issued to the members of the company. Now, who are these members of the company? They are the shareholders of the company. Okay. So, such a report, we call it as the auditor's report. Okay. Next, what we are going to discuss is importance of audit report. Okay. Why audit report is important? See here. First thing is that audit report, it is a statutory requirement in case of company audit. A mandatory auditor, once they get the books of account audited, they do carry out, they complete the audit work, and immediately they have to provide the audit. Okay. Again, audit report is important part of audit process. Okay. A very important part of audit process. Since audit work is carried out They have completed examining the books of account and they have formed an opinion and they have drawn the conclusions, and these things they have to incorporate it. They have to present it to the members of the company. So here they have to summarize, that is whatever audit work they have done. Okay, they have to give a report on it. They have to give a summary of the work that they have carried out. Okay, so audit report is considered as the summary of the audit work that is done by an auditor. Okay, audit report is also, it is one of the medium, it is considered as a medium which auditors, through which auditor is submitting his findings and is expressing his opinion. Okay, so whether he is what he things he has found out in the books of account of the company, what is his opinion, how what is the status of the company, what is the position of the company in his opinion, whether there is scope for improvement, or whether this auditor, when he gets the books of when he does the auditing work of a company, he is in a position to draw an opinion. Reason is he has gone through the entire books of account. He knows where the company stands. So what all things he has found, his findings, he has to submit and he has to express his opinion. So here the state of affairs of the client's business, it is clearly seen in the audit report, because in the audit report, auditor, he is going to give his opinion about the current state of affairs of the business concern. Okay, not only that, shareholders of the company, they actually believe, they rely upon the auditor's report. If the auditor's report is a good report, a positive report, definitely auditors, they feel safe. Not auditors, sorry, the shareholders, they feel safe. They know that the company is properly maintained. Okay, company is in good condition, in the sense the current affairs of the state of affairs of the company is good, and they'll be able to sustain in the market. Okay, so shareholders, they depend on the auditor's report. If the auditor's report is something which gives satisfaction to the shareholders, because it gives the opinion about the client's business as to where they stand and what is the financial position. Okay, so shareholders, they are totally, they rely upon the auditor's report. Okay, and audit report, it is also considered as the evidence of the auditor's work, because audit report, there they give their opinion. So how do they give their opinion? Because they have carried out the audit, they have done their work. So they have done their work and they are in a position to give their opinion. So audit report, it is considered as an evidence of the audit work. Okay, next, it is also a tangible proof, a proof that can be seen, that can be touched. Okay, and a proof that can be used in the court of law as well. Okay, so it is a tangible proof for the financial state of affairs of the company. Shareholders, when they say their company is in good condition, okay, for a proof, they can give out the auditor's report. Simply they can say this is the audit report and the condition of the company, the state of affairs of the company is in this position. They can tell that. And for if at all they cannot, they need not speak in the air, because the audit report they have in their hand, that is a tangible proof about the financial state of affairs of the company. Okay, so this is the reason why audit report is very important for the members of the client's business, that is the shareholders of the company. So students, there are two types of audit report. Okay, one is the clean or unqualified report, or the positive report. Okay, don't get confused with unqualified. The word unqualified, it means that it is not qualified for any sort of objections or complaints or modification. Okay, so we call the positive report as the clean or unqualified report. Okay, so such report is given by an auditor without any qualification, in the sense without any objections, without any complaints. That is the reason the clean report or the positive report, it is also called as unqualified. Okay. Now, the clean report, the first one we will discuss. We have the unqualified report. The second one is qualified report. We call it as the positive report and we have the negative report. Okay, so two types of audit report is there. So first one is a clean or unqualified report. So this type of report, it is issued by an auditor when the financial statement, they are free from material misstatements and they actually give a correct financial condition and position of the company. Okay, so here such a report, that is a clean or unqualified report, it is given by an auditor without any qualification. So here qualification means complaints or corrections. So here, the auditor is giving a report without any objections or without any complaints or without any modifications. So, this clean or unqualified report, it is considered as a positive report. Okay, it is considered as a positive report. Why it is considered as a positive report? Because auditor has found nothing wrong in the financial documentation. Okay, whatever he has audited, he is happy with the audit. He has performed the audit in an uninterrupted manner. That is, he has not found anything wrong in the documentation. So, clean or unqualified report is a very good type of report which the external auditor usually give. Okay. So student, I hope you have understood the meaning of clean or unqualified report. Usually it is also called as the positive report. So if it is given clean or unqualified report, you can make out that this is a positive report. But if the question, if it is asked, give a note on qualified and unqualified report, in that case you have to be very careful. So if qualified, that's the negative report, unqualified, that's the positive report. Okay, clean report, positive report and unqualified report mean the same. Simply if they give the question, give a explanation about the types of report, explain types of audit report. If that is the case, you can give it as mentioned here, like clean and unqualified report. If they give qualified and unqualified report, be very careful. Okay, so understand the term. So usually before giving a clean report, auditor, he usually observes the following things. As you can see on the screen, he is supposed to examine the books of account as per the accepted principles, isn't it? The generally accepted accounting principle. So books of accounts are maintained according to the generally accepted principle. He should also see that all the audit procedure are correctly carried out. Okay, auditor is also should ensure that the provisions of the Company Act and the other laws, they are properly complied with. In the means they have followed the provisions of the law. Okay, auditors, the client organization have followed the provisions of law. So this is to be verified by the auditor. And auditor, when he after he completes his audit work, okay, when he gives his opinion, he should be satisfied. Okay, he should be satisfied with the truthness and fairness of the account. So if he is satisfied, definitely he can give a clean and unqualified report. Okay, he should form an opinion that whatever accounts, books of account are maintained by the company, they are true, they are as per the law, they are as per the generally accepted accounting principles. So he should form an opinion based on his satisfaction. Okay, then only he can give a clean and unqualified report. Okay, understood? So the second type of report is the qualified report or adverse report. Okay, this is also called as a negative report. Now, adverse report or qualified report. What is it? Now, if the auditor, if he sees that, if he finds that there are certain irregularities in the books of account or in the financial statement, okay, so what he does is he invites the attention of the directors. He will tell the directors that the books of account are not properly updated, they are not regularly prepared. That is, maybe the accounting clerks are preparing at the end of the month. Okay, they are not continuously updating the books of account. Day to day transactions might not be entered. Okay, so these are the irregularities he finds when he goes through the books of account. He verifies and examines the transaction. That time he'll come to know about the irregularities in the while maintaining the books of accounts. So he may draw the attention of the director towards this irregularities, and he may also suggest the directors in what way the books of account or the financial statement can be altered. Okay, should be altered. Now, the suggestion that is given by the auditor, okay, because he has found irregularities, he has brought it to the notice of the directors. And he also suggests the directors the ways in which these irregularities can be overcome. That is, the financial statements, they can be corrected or changed. Okay, now, directors, they are supposed to welcome the suggestion. Okay, they should accept the suggestion and they should alter the accounts according to the requirements of the auditor. But thing is that if the directors refuse to alter the accounts, okay, alter the financial statement, then the auditor, he will give in his audit report a qualified report. Okay, that is in the meaning is he is going to tell that the report that he has given, it is qualified for certain complaints and certain objections. That is, he has complained to the directors regarding the irregularities. He has suggested them, but his suggestions were not accepted, and directors did not alter the accounts or the financial statement. Okay, so then he is going to give a negative report. He may simply say in his audit report, he may simply say books of account of the concern are not regularly maintained, or there are irregularities in the books of account or the in the financial statement. So this statement in the auditor's report, it's going to badly affect the image of the company, because it's a negative report. Okay, the image of the company will be affected because of this adverse report given by the auditor. So a qualified report which is given by the auditor, it is when there is sufficient information for him to form an opinion that the accounts and the financial statement, it does not draw a true and fair position, in the sense what all books he has gone through and he has found some errors or frauds, or like he is not happy the way the books of accounts are maintained. Okay, and there are statements which are false. Okay, so here it becomes very difficult for the auditor to form an opinion about the truthfulness of the books of account and the financial statement. So he knows that the statements are not correct, they are false. He is aware of it. Okay, so in that case, he is going to give a qualified report. A qualified report means he is going to give a report which is qualified for objections and complaints. Okay, for modification. It is this report is giving, it's qualified for objections and complaints. So definitely this is a negative report given by the auditor. So when negative report is given, definitely the auditor, he is not satisfied with the matters in the company. He is not able to give his opinion, and also is not reason for not giving a particular opinion is that the required information might not be available. Okay, So in this case, auditor, he has to give a report to the shareholders, isn't it, about the violations of the provision of the Companies Act. So there might be many loopholes. Simply we'll say, like for example, uh, there might not be proper valuation of stock in trade, or there is no provision for bad debts, or report from the branch auditor might not be received, books of accounts are not properly maintained, asset and liabilities might be overvalued or maybe undervalued. Okay. Not only this, the financial statement may also have some misleading statements might be given. So when this is the case, when the sufficient information is not available, or when wrong information is available when inquiry is made by the auditors, this he is not satisfied with the explanation that he has received from the concerned officer. He will have, when he is going to check out the books of account, when there is certain queries, there is certain confusions, he is going to approach the concerned officer. So when the concerned officer, the correct explanation is not received from him, okay, when information they are hidden, when the information is not given, it does not satisfy the auditor. He comes to know, auditor knows that whatever explanation is given is just to cover up the mistakes, or the whatever information they give, he is not satisfied, he cannot form a proper opinion, he is not happy about the how the query is solved. So see, these are the reason which makes the auditor give a qualified report. So qualified report is the adverse report or also a negative report. So this such a report, it is going to affect the performance of the directors also, and also it's going to affect the market value of the shares of the company, because audit is not a clean report, it's a negative report. So the auditor has to completely satisfied and has to form an opinion about the good, about the the company is in a whatever information is made available to him is, he is satisfied that they are true, then only he is going to give a clean report. Okay, so student, I hope you have understood the two types of report, that is clean or unqualified report, and the second one is qualified report or adverse report. Student, please go through this question, because every semester this question is asked. Okay, so 6 mark question, you can simply give the explanation of both the types of. Okay, students, we will now discuss about the CARO 2015. CARO stands for Companies Auditors Report Order 2015. Okay, so CARO stands for Companies Auditors Report Order. Okay, now CARO, it means that, okay, CARO 2015, it is actually a statement on which an auditor has to comment upon all the matters that are asked in the statement. Okay, so it is a statement which will include many things. Okay, and on this statements, an auditor has to give his comment. Okay, so this statement is actually issued along with the auditor's report. So when auditor is giving his report, whether it's a clean report or whether it's a adverse report, either of the case, along with the auditor's report, CARO 2015, this statement is also what we call attached to the auditor's report as an annexure. Okay, so CARO, it is this report, that is CARO 2015, it shall cover every company, including a foreign company as well, which is defined in the section 2, subsection 1842 of the Companies Act 2013, except the companies which has capital of less than 50 lakhs. So such companies, that is maybe a banking company or an insurance company or maybe a one person company or a private company whose capital is less than 50 lakh, they are accepted from for them the CARO report 2000, that is CARO 2015 is not there. Okay. Other than that, every company, even including a foreign company, has to they have to go for this CARO 2000. Okay. Now, what are the matters that need to be included here? Okay. So, matters to be included in the auditor's report. Okay. That is first one, whether the company is maintaining proper record showing full particulars, including quantitative details and situation of the fixed asset. So as I've clearly said, just look at the matters that are involved here. So this is a CARO 2015. It is an annexure to be attached along with the auditor's report. So if an auditor is giving a positive report, it is based on the statements that are commented by the auditor on the annexure. Okay. So whether it's a positive report or a negative, that is a clean report or an adverse report, it is usually based on the CARO 2015, because auditor is going to comment on all the matter that is involved in the CARO 2015. Okay. So here a company in the matters to be included in the auditor's report, that is whether the company is maintaining proper record and showing full particulars, including the quantitative details and the situation of fixed asset. So this is to be thoroughly gone through by the auditor. Also, the physical verification of inventory, it is conducted at reasonable intervals by the management. So auditor, he has to get satisfied that inventories, they are properly and physically verified by the management. Okay. Also, whether the company has granted any loans or whether the loans are secured or unsecured to companies or firms or any other parties. Okay. That covered in the register maintained under section 189 of the Companies Act. So auditor has to comment on this, whether it's granted the loan or whether it has not granted the loan, whether it is granted the loan, if it is secured, unsecured. So auditor has to comment after his verification. Okay. Then whether there is an adequate internal control system. Okay. So depending on the size of the company, a proper internal control system should be there. So depending on the size of the company and the nature of the business, what sort of internal control is uh, there in the company, and usually it is much required when it comes to purchase of inventory and fixed asset, and also for the sale of goods and services. So whether there is an adequate internal control system, okay, this has to be verified by the auditor and he has to comment. Then whether the cost records are properly maintained and as it has been specified by the central government under subsection 1 of section 148 of the Companies Act, whether such records have been maintained and have been made. Okay, that is important. So whether auditors have verified it. Also, whether the company is regular in depositing the dues such as the provident fund is there, the employee state insurance is there, the income tax is there, the GSTs are there, and if at all any dues are pending, what about the arrears? Okay. So auditor has to give a comment on this as well. Whether the amount which is need to be transferred to investors education and protection fund, whether that is transferred or not, and whether in case of a company which is registered for a period not less than 5 years, so in such cases, what about the accumulated losses at the end of financial year? Okay. So whether whether the company has incurred cash loss in any in such financial year, that is immediately preceding the financial year. Okay. Also, whether the company has defaulted in repayment of the dues to a financial institution. So dues that need to be paid, whether the company has defaulted, means in the sense whether they have not paid any dues to any of the institutions or banks or debenture holders, and if they have not paid, then in from which period they have not paid, and what is the total amount of the default payment. Okay, that should be known to the auditor. Also, whether company has given any guarantee for loan. The company, they them when when some other company the loan is taken, whether this company has given a guarantee for any loan which is taken by other banks or financial institutions. So if at all they have given a guarantee, then what are the terms and conditions, and whether they are of prejudicial to the interest of the company. So whether such terms and condition can affect the company or not. Okay. So this matter is to be included in the auditor report. So auditor has to comment. Okay. He has to go through all this, the matters, and he has to give his opinion in the auditor's report. And whether any sort of fraud on or by the company, whether the company has committed any fraud or on the company some fraud has been taken place. So whether it has been noticed and reported during the year. So if at all such frauds is noticed and reported, then what is the nature of the fraud and what is the total amount that is included in the fraud, it has to be clearly indicated. So auditor has to dig deep and find out the correct amount, the values of fraud. Okay. So students, we have seen what are the different matters that are to be included in the auditor's report, and it is the duty of the auditor that he has to report on all the mentioned matters in all the 12 points we have seen. So on all the 12 matters, the auditor has to give his words. Okay. And also whether he is satisfied with the correctness of the transactions that are recorded in the books of account, and that auditor has not come across any sort of errors or frauds. So in case if the auditor wants to qualify his report due to certain reservations, that is, if he is not able to come to any conclusions, okay, then he must also mention why, what is the reason for the same. That is, if auditor is not able to, in any of the 12 matters, if auditor is not able to comment, okay, then like what is the reason why he is not able to comment, whether he is not satisfied with the explanation given, or whether he still expects some more explanation to get satisfied. So reason why he is not commenting, that also should be clearly mentioned in the report. So it is duty of the auditor to specifically report on all the matters that are to be included in the auditor's report. Okay. So CARO 2015, I hope student you have clearly understood. So this question also is asked in the exams. So dear students, with this topic, that is CARO 2015, we have completed the 5th chapter as well. That is auditing of a company, that is a company auditor. Okay. So students, with this we have completed the entire syllabus of the auditing subject. So the questions that are asked in the semester exams, I will be sending you a soft copy into the group itself. So students, just to go through the question papers. And if in case of any doubts, you have my number, you can call me, I can explain you. Okay. So thank you dear students, and have a great day ahead.